Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. AI is everywhere and investing is no exception. I wanted to look today at how artificial intelligence can be used in the investment process by someone who actually does it. And then the big question, if you can use AI to pick stocks, does it actually mean the results will be better? As always, this is general information only, and you should always seek professional advice before making investment decisions. Zhe Chen is Senior Vice President, Portfolio Manager and Research Lead at Acadian Asset Management. Zhe, welcome to Fear and Greed.
Thanks for having me on the show, Sean.
Okay, how are you using AI? Explain it to us.
Yeah, so we're using AI in a number of different ways across our process, and we're really trying to leverage the specific strengths of AI for each of these applications. So I'll give you a couple of examples. One way we use AI is to find hidden patterns in massive data sets. So, if you're looking at market data and you're looking for something like declining short interest, rising volumes and price strength, that's usually symptomatic for a short squeeze happening in the market. What the AI allows us to do is basically to look for that pattern over the 43,500 stocks that we cover. And so what we're leveraging there is the power of machine learning to basically see everything, right? We also use AI, for example, to forecast fundamentals. So, the earnings of a company, a human analyst is going to rely on their intuition and historical experience to do that. The AI is doing the same thing, but it's learning from the data, right? So the AI is looking for where analysts have consistently overestimated or underestimated earnings. And so the advantage that AI brings there is that AI can also be perfectly objective because it knows what the actual future earnings have been in the past, and it's always correcting itself to hit those particular numbers.
Can I just ask on that one, Zhe? So the first one I get in terms of the patterns in the data, and you can actually see where short selling's happening without, it almost comes to you automatically. Fantastic. The second one, though, that is more about analyst behavior. So you're actually looking at a bunch of analysts. You're saying person A continually is, 4% over what comes in because they're an optimist. Person B is 4% under. And so you're using AI to basically bring all that together and say, so based on their past performance, this is where it's probably going to be. Is that the idea?
That's right. So that is one of the things that we can correct for. We can look at the track record of every single analyst who reports to see where they're consistently over and under. And the other thing, in fact, that happens is that, we find that analysts as a cohort, they tend to, when you're a year out from when a company actually announces earnings, the group tends to be overly optimistic. And what happens is, as the year progresses and, your cost out isn't quite as successful as you thought it would be, and you haven't grown revenue quite as much as you think, those estimates tend to come down so that when you're, 2 or 3 days before the actual earnings are announced, those analyst estimates are pretty spot on. Now, the issue is going to be, when you're comparing company A versus company B, company A is reporting, a year out in the future, and company B is reporting 3 days in the future. Company A is just going to look, too good from an analyst perspective. We can correct for that effect.
Yeah. Okay. So other AI uses?
Yeah, absolutely. One of the big uses right now is obviously using AI to extract insights from unstructured data. So, for example, we can get an AI to listen in on analyst earnings calls. And, the AI learns that there's a difference between, for example, when a CEO says, we expect revenues to grow year on year by, 10.5% versus when that CEO says, we expect potential earnings uplift, right? The former, when they're very specific, that has a much more positive relationship with future returns than when they're vague. So what the AI is doing there is that it's also, continuously learning from everything it sees, and it's learning to distinguish between being vague and being quite specific.
It's an interesting one, that, because I have worked in communications in listed companies, and every word in that media release or every word in that ASX release is looked at, considered. And this is what you're kind of saying. You're actually being able to pick up, or AI is being able to pick up the nuances that companies are making.
Yeah, that's an excellent point that you've made, which is, the official release has often been prepared weeks, months ahead by a team in the back end. What's really interesting is actually when you get into the question answer section, that unstructured bit.
Yeah.
Because that's where you can really draw out insights that maybe the company did not want to release.
Yes. Okay. How do you use that? So you can draw out these insights, And then are you using AI to make an investment decision? Are you using AI to inform an individual making an investment decision? How does that work?
Yeah, so we run basically an automated investment process, right? The AI sort of plugs in. So, we have an alpha model.
Mm-hmm.
The role of the alpha model is to predict the expected returns across every single stock that we cover, all 43,000 of them. And what that means is that you're able to produce this range of forecasts. They then get fed into a portfolio construction process where the idea is we want to pick an optimal set of stocks based on those alpha forecasts, based on transaction costs, based on risk characteristics, to give you a portfolio with strong positive expected returns, but that are also within a certain risk framework, right? And that uses an optimization engine, which also leverages AI in order to find the optimal solution. And then once we have that portfolio, then it gets sent to trading, and AI also comes in through that process in order to determine optimal order routing, for example.
Stay with me, Z. We'll be back in a minute. My guest this morning is Zhe Chen from Acadian Asset Management. You went through the process ahead of the break. How much value does it add? Because at the end of the day, it still relies on analysts' forecasts. It still relies on words used by management in a release or what they're talking to analysts about in the post-results conference. I think probably the shorting in that is a bit different because it's that's actually real money and you can actually see what people are thinking. How much, have you got sort of data that can show that it works?
Yeah, certainly. I think to show that it works, you need to look at our performance history. And I think it has bared up, throughout the track record of the strategies. But, I can talk more specifically around, where AI is really useful compared to, say, human analysts, and where perhaps, the human analysts still have an edge.
Yeah.
So if you think about an AI-driven model and how that compares to a human analyst, the human expert is going to know everything about the company, right? The cash flow, projections, the project pipelines, the management structure, etc. Where they may not be as strong in is actually determining whether any one of those characteristics is particularly good or bad for predicting X amount of returns, right? So how good is having marginally better management in an expected return sense? What the AI-driven model does is we're not actually talking about one, AI module. Typically what happens is we have a whole bunch of different AI modules, and each of those modules are assessing one very specific aspect of a company, right? So think about, the AI that's forecasting earnings.
Mm-hmm.
That's its only job. And what it's going to do is it's going to look for information that is additive to the consensus estimate for that company. And then it'll do that by, correcting for analyst biases, which we talked about a little bit earlier. It can also bring in other information like looking at, suppliers and customers of that particular company to see if they're getting upgraded or downgraded. It can look at, the reported fundamentals of peers, for example, to see if they're getting better or worse. But it has, for example, no idea about the management quality, right?
Yep.
We'll have another AI module that'll look at that, or, it's looking for example, technical trading patterns for that particular stock. The advantage that you have there is that, each of these modules can also measure their own effectiveness. Now, what is its strength? And how good is that ability in actually predicting future returns? And that allows us to basically bring together all these different insights in a very measured way to give a very precise expected outcome for a stock, right? That's very hard to do from a fundamental point of view. Where does the human analyst help? Well, look, AI at the moment, can only consume media. What it can't do is actually probe, right? So,
Yeah.
We talked a little bit about sitting in on that earnings calls. We're listening to the Q&A, but we're not posing the questions. And so, as a human analyst, that's where you can add additional value. And, another example is, you have activist investing, right? From our point of view, investing is a passive exercise in that we're consuming the data and we're picking stocks that we think will be better than other stocks. An activist investor will come in and they will look for a turnaround opportunity where their own actions can lead to that company then outperforming down the line. We're not quite there yet with our suite of AI tools.
Do you think another example I'm guessing is like legislative change. Like, so AI probably can't predict legislative change yet. And if there's big legislative change, that can make big difference to equity prices, etc. These sorts of things, though, will it get there, do you think?
Yeah, that's a great question. So in terms of legislative change, that kind of information already flows into the model through a couple of different avenues. So one would be the news flow, right?
Yep.
Often people are writing about the impact of legislative change on different companies. Now, we consume that news flow through using AI to read the news, and that will impact what our forecasts are going to be. And of course, the other avenue that it comes through is through broker analysts themselves. They will be looking at what the impacts are, and they will be upgrading and downgrading their numbers with respect to prospective legislative change. And again, we will draw from that information source to make an investment decision.
Yeah, fascinating. Is there a job for an analyst in 10 years?
Look, I think
or you
from
hesitated.
Our perspective,
See, you hesitated.
Look, I think from our perspective, it's still extremely important to have humans in the loop, right? AI does need an immense amount of guidance in order to do its job properly within an investment context. So, let me give an example of using AI poorly, right? I log into ChatGPT and I ask ChatGPT to build me a portfolio of stocks that will outperform the market. It will probably do a terrible job of that.
Mm-hmm.
And, the reason for that is because, it does not have access to market data. It doesn't have access to earnings forecasts. It doesn't have back-end financial models. But the main thing is that, actually, it doesn't have that underlying mechanism to translate insights into return forecasts.
Yeah.
That's where the humans still come in. It needs to tell the AI how to make that connection.
Zhe, thank you for talking to Fear and Greed.
Thanks, Sean. Thanks for having me.
That was Zhe Chen, Senior Vice President, Portfolio Manager and Research Lead at Acadian Asset Management. This is the Fear and Greed business interview. Remember, this is general information only. You should seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, business news you can use. I'm Sean Aylmer. Enjoy your day.